Hello out there in cryptocurrency land. Welcome back to Real Crypto. Thank you for joining me. Really appreciate it today. And what we're going to talk about today is the larger picture in Bitcoin. It's been a long time since I've done a video like this. I kind of used to be famous or infamous, depending on how you wanted to view it, when I would talk about the bear market cycle in Bitcoin going all the way back up here to this recent action up here. I have a pretty popular video called Bitcoin 11,500. Back when we were up here towards 15, 16,000, I think it's my second most popular video. So I've been known for kind of making these market predictions, and most of the time they're pretty accurate. Most of the time they come true, but hey, no one's 100%. But what we're going to talk about today is some analysis I've done on the Bitcoin market cycle rhyming from the 2013, 2014 market cycle, which I happen to have very conveniently pulled up right for you over here. So here's the 2013 peak, here's the 2014 market cycle, here's 2015, the ultimate low of $152 Bitcoin. You bought there, right? I just want to make sure you guys bought there and you're still hodling, because that's where you hodl from when you buy like sub $500 Bitcoin. And then, you know, the subsequent upward market that we've been in ever since for the past, 3 years. We've been in a bull market for 3 years. People forget that. And it takes time for that bull market to wear down. Now, off of such a big move, this market took a very long time to correct, and that's what we're in the middle of right now. And Bitcoin has been rhyming almost leg for leg with this 2014 market cycle up until maybe about a month ago. So let's kind of walk you through that. So again, here's 2013 peak, here's the 2014 bear market. And Bitcoin has been rhyming with this market cycle till right about here. All of this action here, not all of it, but a vast majority of it. Here we go. A vast majority of this market action has been almost leg for leg. I mean, almost. Now, you guys may have heard me say this before, but market cycles do not mirror each other, but they do rhyme quite a bit sometimes. And this 2014 market cycle we have been rhyming with for a long time. Now I'm going to point one area out to you here, this area right here. This is a very key level for this 2014 market and also for our market today. Now you can see this level here was tested once over here, twice here, 3 times here, and you probably call this a 4th time over here on this run up here. There's also another thing here, this cup right here. There's a cup right here that came up. Now I overdrew it there, obviously it doesn't come up that far. There's also a leg up here from this 3rd spike low all the way up here to these most recent highs. And this move was, give or take a percentage point or two, 100% of a move from the low to the high. Now let's go over here to 2018, 2017. So here's the 2017 peak, here's the 2018 market, and I believe this is where we've diverged with that most recent area, right about there. Okay, this is where we diverged, and I'm going to point those same areas out to you here in terms of those consequential levels in 2014. Here's the 3 peaks right here. I want to call it a 4th peak. There's a bunch of peaks over here, but you can see this level was tested quite significantly in the same way that this was. We also have the same cup here, and again, like I said, these look almost leg for leg, right? They look very, very similar. And we also have the 3 touches. Actually, you can't see. Okay, there you go. We have 1, 2, 3 touches and a 100% upward movement into that same level. So in these, in these areas, this is where the Bitcoin 2014 market really rhymes with the 2018 market, but it starts to diverge after we don't get a lower low here in April. And so let's kind of move over here. So here's that prior low in Bitcoin in the 2014 market right here, and we get a spike lower here trapping in a bunch of bears. This traps a lot of bears on the market on this spike to the downside, brings in a bunch of bulls as well, and then we get a subsequent little move here to the upside before the ultimate failure in the very beginning of 2015. Now, one thing that has been different between these two market cycles is, if you noticed, from the top here in Bitcoin most recently to kind of where I consider our market cycles diverging, it's been about 107 days. All right, so let's see how long that was in 2014. And this is one of the main key differences, is the time scale element is very far off. So this is about 295 days. Okay, so you can see we're moving on a much faster clip, about 60% faster. That's not based on that math, that's based on some other calculations I've done, but we've been moving at a much faster pace here recently compared to this market, which took a much longer time to get near as low as we did. Even all the way down here to this point, and this is another key factor where these markets have been rhyming, to this third peak we were down about 70%, give or take, and that took 133 days. And from this peak to that third peak, we were down 70%, and that took 52 days. So again, you can see the fact that the percentage drops have been the same, but the time scale has been amplified in the most recent history. Now, since we've diverged here from the market cycle in 2014, I've been kind of looking for a rhyme or a reason or something to explain that, and also a rationale for things going forward. The explanation isn't as important more than it is, I think, the rationale going forward. So let me show you what I have over here in the 2014 market cycle, which is rhyming quite significantly with the 2018 market cycle. So let's get rid of all these lines. And we're going to zoom in here a little bit. All right, now the first thing is first. There's an immediate downtrend here in Bitcoin. Right there, there's an immediate downtrend in Bitcoin. And actually, we can draw it a little better. I do like to make sure my trend lines are touching proper points, and sometimes it's difficult when you're dealing with different charts and different scales there. So this actually differs from what I've been drawing most recently. Oh, maybe that's why. Sorry, got to get this right for you guys. Okay, so there we go. That makes more sense. I'm going to go full screen with this. It's not that much bigger, but it will help. Okay, so you can see here we have a top here, a top here, a top here. We break this trend line, then we ride it down, fail to have a lower low, and then we move higher. And this is that 100% move here. So once this trend line is broken, this trend is dead. It's going to be very, very difficult for Bitcoin to break back into this trend line. Don't you agree? Because after we go sideways, you're going to need a drop of 30% in one candle just to touch that line, let alone getting down into it a little bit would take about 40%. So what develops now is a different trend in Bitcoin. And this is what's respected for the remainder of the bear market. And if you take a trend line from this area here and draw it all the way down, you can see right here we have this area here respecting a big black cavernous area, and also that's where we finally break it. And if you look at it, in the middle of respecting this trend line, we have our ultimate low of 152. And this trend line doesn't get broken for several more months, 173 days. Man, that's over half a year. All right, so from early January into July, about 6 months, we have from the ultimate low a sideways market. All right, you can see that there. But the main theme here is this trend line. This is the main theme, also respected by my 200-day moving average, which you can see there in purple, and then I have a 50-day moving average in aqua. I won't talk too much about the 50-day in terms of the 2014 market cycle. So this is where Bitcoin kind of took two different legs to the downside, and most recently here, we've seen similar action in 2018. All right, so I'm going to go full screen for this one too. So let's line this up so we can draw a great looking trend line. We'll remove all of these trend lines. So here's the most recent downward move in Bitcoin. You can see there respecting those two areas, and then we were living on top of it. Now we go sideways, and now we're kind of going into a sideways market after the bounce, right? But we still see the same thing in terms of the secondary trend line. And this is the most important thing, I think, out of this whole video. I also feel it's important to give you guys that history so you know how I came to this conclusion instead of just giving that to you in minute one of the video. So sorry you've invested 9.5 minutes to get to this, but I think it's important to know the history of the markets. So right now, according to the market theory that I've kind of developed while looking at those two cycles, this is an extraordinarily important trend line that big white overarching trend line with a black background. This is going to be, we're pretty much going to live or die by this trend line more than likely. You know, as long as we continue rhyming with the bear market here in 2014, and we are still rhyming with it. You know, the cycle drifted a little bit, but it is kind of moving the same. Now, a couple of differences in the charts. Number one would be the moving averages. Obviously, because the time series analysis is different, again, we're moving about 60% faster over here. That means that these moving averages are actually going to be completely different. You can see here we had a peak in the moving average, and then it dropped quite abruptly here. You can see that right there in the purple. It dropped quite abruptly, especially for a 200-day moving average, but that was due to this up thrust and the subsequent down thrust here. It's basically a little inverted V. We don't have that over here in 2018 because the market cycle has been much shorter, and the 200-day takes 200 days worth of data, and so it's going to be much smoother. And this probably won't end up lining up with this trend line for a long time, if ever. But however, this 50-day, there's a possibility that maybe this 50-day is going to lead us lower. I say possible because you see it's been chopped up quite significantly. It has not been a great indicator of trend, versus the 200-day actually hasn't been a pretty bad one. Now, these are standard moving averages. These are not exponential moving averages. Just keep that in mind as well if you want to duplicate these charts and do your own analysis, which I recommend doing. All right, I'm probably going to miss something. We all do from time to time. But I think right now the overarching theme of the market is that we have two different kind of downtrends. We have a very immediate, very abrupt downtrend, which we witnessed the end of down here at 6,000, and over here we witnessed the end down over in the 340 level, a bounce, and then we have a new trend develop with a less aggressive trend line leading us down ultimately to the lowest point, which we're probably going to do as well, right? This is probably going to go sideways, roll over, maybe have a bounce or two, and then ultimately, more than likely, capitulate. We've been discussing capitulation here at Real Crypto for a while, debating about what those levels are going to be. We've been talking about 36 to 2,400. I don't see much variance from those numbers, even based on this most recent market action. In fact, I was looking for a variance to those numbers, and I actually have not found any. So we still have those two numbers, somewhere in between 2,400 to 3,600, I have as the ultimate low. Now, just for your reference, this ultimate high here was about 1,150. People call it 1,200, which is fine with me. I don't see us getting that low in Bitcoin, which, believe it or not, that would actually be very standard for us to get down to a prior high point. You can see over here in the 2013 market, we had a high at about 259, and we actually undercut that slightly to the 152 level in terms of the ultimate low in 2014. I don't see that happening to the market now, however, because it was a much more aggressive run-up. In fact, this run-up here was about 1,800% in Bitcoin from 2013 to 2013. This all was in the same year. We have a 13,000% run from 152 to 20,000. 13,000% run. So extremely aggressive run. It would make sense with that much price appreciation. We don't get a full retracement, but still 36 to 2,400 is a pretty aggressive low, and that would take us down significantly from the highs. And one of the reasons why 36 I think is pretty good is because that's about an 82% downdraft, which aligns with what happened over here in 2014. We had a downdraft of approximately the same percentage. So this one's 86%. All right, this one's about 86%. So if you take an 86% number, if you think we are going to match leg for leg in terms of percentages, then you think we're going down here just below 3,000. I've got 85% at 2,900. So, all right, there you go, ladies and gentlemen. Let me know what you think about my kind of thesis here in the charts about the overall market cycles matching each other. I do understand that 2018 is different from 2013 and 2014. I know Mt. Gox happened. I know lots of other things happened. But really, it's mainly the technicals in the chart that I'm really concerned with, because sentiment can't be gauged by news. It can only be gauged by the charts here. And in my honest opinion, the change in the different part of the market cycles, or I should say the change in between the two market cycles of 2014 and 2018, is the fact that we do have a different marketplace, which is why it's faster, which is why we're probably going to bottom sometime later in this year. I don't know exactly when. The fact that we do have a higher low here, to me, does indicate that this takes longer to play out. So initially my bottom based on the market cycle at a 60% clip said we bottomed yesterday. Obviously that hasn't happened. So we're probably going to see a much longer bear market here in cryptocurrencies, at least in Bitcoin and probably a lot of the top altcoins. And if we have another nice route to the downside, probably most of the altcoins again. So, all right, ladies and gentlemen, like I said, let me know what you think about the video in the comments. Thank you for joining me today. Hope you'll subscribe to the channel, and I will see you next time.